So Budget 2017-18, the government has billed it as an opportunity, fairness and security budget. So let's just take a look at some of the issues impacting our world as public accountants in the work that we do in support of small businesses in Australia. Overall, we think this budget does deliver a good outcome for small business. It provides certainty and stability and encourages small businesses to go out and invest and grow their organisation. Importantly, the budget does provide a range of measures, such as the extension of the instant asset write-off. The $20,000 instant asset write-off has been continued for the coming financial year. So small businesses can go out tomorrow and invest in their business with the security and certainty that they can claim that tax deduction immediately up to $20,000. So that's a good initiative. Our view is that we want to see that permanent, just as much as the Henry Review of Taxation recommended those years ago. So we want to see the instant asset write-off a permanent feature of our tax system. Overall, no new taxes for small business, which is a positive sign. And another key aspect of the federal budget 17-18 was the inclusion of a $300 million fund to assist state and ultimately local government to reduce the regulatory burden on small businesses. You would all know that one of the major interfaces small business has with government is with state and local governments around things like permits and liquor licensing laws and the like. Examples around trucking companies taking goods, or trucking small businesses taking goods from one state to another, having to stop over the border to comply with different state rules and regulations. So they are the examples by which the government is attempting to wind back the regulatory burden on small business through a $300 million package of assistance. So that's a good thing. So overall, a budget that provides confidence and certainty to Australia's small businesses. There are some aspects in relation to the Medicare levy that is up 0.5% to 2.5% on taxable incomes from 1 July 2019, and that's really there to fund the NDIS, and that there will be also a new levy on banks. And the temporary budget repair levy on high income earners is not extended past the 1st of July 2017. We've touched on the issues in relation to small business. Those instant asset write-offs have been included and extended to the 30th of June 2018. We'll be continuing to lobby the government in relation to extending those and making those permanent, which is a really strong aspect of this budget. Housing affordability, lots been said in the media about this, and this is really an indication that there is no silver bullet in relation to housing affordability. The government is implementing a range of initiatives and measures to increase the supply of housing and provide some tax incentives as well. So there'll be the ability to, for first home buyers to save through a deposit-based facility through voluntary contributions on their super from the 1st of July. So that's a positive initiative designed to improve the capacity of first home buyers to get into the market. There is also some reductions in barriers to downsizing, that from the 1st of July 2018, if you're aged over 65, you'll be able to make non-concessional contributions of up to $300,000 per person to your super after selling your home, regardless of how much you've already put in or have in your superannuation. So per couple, $600,000 capacity there in relation to downsizing from 1 July 2018. A range of other facilities around capital gains tax, which we'll pick up through subsequent updates as well. Some initiatives that we've been very happy about to see supported in this budget is some targeted measures around the black economy, so some additional funding to the ATO to target the cash economy, which is positive, and the taxable payments reporting system to contractors, in particular the courier and cleaning industries. I suspect perhaps it might be the government just testing these initiatives to see how they work in those sectors, and there's obviously some issues they're trying to address specifically in relation to that those industries. Negative gearing, there's also some changes in relation to negative gearing, the disallowance of deductions for travel expenses, including accommodation for residential investment properties. So a key change in relation to negative gearing and that disallowance. A couple of other tweaks around capital gains tax, but no major reform in relation to either negative gearing or capital gains tax. So all round, we think a positive step forward in the 2017-18 federal budget for small business, providing certainty to go out tomorrow, to employ, to invest and to grow. We'll have more updates coming through our various social media channels through LinkedIn, Twitter and Facebook. And don't forget to keep an eye on our digital hub, pubact.org.au.